Welcome to Simple Mind Space, the podcast where we delve into the empowering world of personal finance, guiding you on your journey to financial freedom. Today, we're going to be demystifying the world of stock market investing with insights and principles inspired by the legendary investor, Peter Lynch. You might be surprised to learn that you possess many of the tools necessary for successful stock picking, and we're here to help you discover and leverage those advantages. Before we dive into the world of stocks, let's understand why they're considered a cornerstone of a robust long-term investment strategy. Historically, stocks have outperformed other investment vehicles like bonds and treasury bills. While the percentage differences in annual returns might seem small, the magic of compounding generates a substantial difference over time. Think of it this way. If you invest a consistent amount monthly, say $50, and earn a 6% return, you'll accumulate a significant sum after 30 years. Now, factor in taxes, which chip away at your returns annually. The key to maximizing your returns is utilizing tax-deferred accounts like IRAs, 401ks, or 403b plans. These plans allow your earnings to compound without immediate tax implications, letting your money grow exponentially. Remember, time is your greatest ally in the stock market. The earlier you start, the more your investments benefit from the power of compounding. This doesn't mean that starting later is futile, but it does require adjustments in your investment strategy. The key takeaway here is the incredible power of compounding, especially when you have a longer time horizon. Now, before you even consider investing in the stock market, ask yourself a crucial question. When will I need this money? The stock market, with its inherent volatility, thrives on long-term investments. If you anticipate needing access to your funds in the short term, stocks are not the ideal avenue. Think of it this way. The money you invest in the stock market should be money you're comfortable setting aside for a significant period, ideally 5, 10, 20, or even 30 years. This long-term perspective allows you to ride out the inevitable market fluctuations and reap the rewards of a well-chosen portfolio. It's crucial to understand that market volatility is a fact of life. Individual stocks, and even the market as a whole, experience ups and downs. These fluctuations are perfectly normal. Trying to time the market, especially with a short-term outlook, is essentially gambling. The real magic of stock market investing happens over the long haul. While there are no guaranteed shortcuts to doubling your money quickly and safely, a well-researched stock can yield significant returns in 3, 5, or even 7 years. Remember, patience is not just a virtue, it's a winning strategy in the stock market. One of the most empowering aspects of stock picking is the advantage you inherently possess. Your personal experiences, your everyday life, your profession, and even your local community are fertile ground for discovering promising investment opportunities. For example, let's say you're a car enthusiast and recently purchased a new car from a brand you find superior to its competitors. You've experienced the quality, the performance, and maybe even the customer service firsthand. This direct experience could be your starting point for researching that company's stock. Another powerful edge comes from your professional life. The industry you work in, the companies you interact with, and the trends you observe can provide invaluable insights into potential investment opportunities. Imagine you work in the healthcare industry and witness firsthand the growing adoption of a particular medical technology. This could be your cue to research companies specializing in that field. Remember the story of the fireman who noticed a local factory consistently expanding and hiring? That simple observation led him to invest in the company, turning him into a millionaire. This story highlights the importance of staying attuned to your surroundings, as investment opportunities can often be found in the most unexpected places. Now, let's talk about the stomach, the unsung hero of successful stock investing. While the brain plays a role in research and analysis, it's your ability to stay calm amidst market fluctuations that truly matters. Before investing a single dollar, take a moment of self-reflection. Ask yourself, how will I react if the market takes a downturn? Honesty is key here. If you foresee panic selling at the first sign of a dip, then it's best to reconsider your investment strategy. The ability to stomach volatility, to trust in your research, and the long-term potential of your investments is what separates successful investors from the rest. Central to intelligent investing is the concept of a story. What exactly is a company story? Think of it as a narrative that explains why a company's earnings are likely to grow. This story isn't about whimsical narratives. It's rooted in tangible facts and thorough research. For instance, you might discover a company successfully reducing its production costs. This cost-cutting measure directly impacts the bottom line, potentially boosting earnings. Maybe a company is on the verge of launching a game-changing product. This innovation could disrupt the market, driving sales and earnings growth. Building a compelling company story involves understanding the factors influencing its financial performance. This might include analyzing its cost structure, assessing its competitive landscape, or evaluating its management team's track record. Remember, successful stock picking isn't about relying on gut feelings or blindly following market trends. It's about crafting a well-researched and logical narrative that explains why a company is poised for growth. Now, let's explore the different categories of stocks, which can help you organize your research and develop more focused company stories. Fast growers. These companies are the darlings of the stock market, boasting earnings growth exceeding 25% annually. Think of them as the high-growth startups disrupting industries and generating considerable investor excitement. Slow growers. Don't let the name fool you. While their growth might be less dramatic than fast growers, slow growers offer stability and often reward investors with consistent dividends. Cyclicals. These companies ebb and flow with the broader economy. Think of industries like automotive or housing, where demand fluctuates based on economic conditions. Asset plays. These companies possess undervalued assets on their balance sheets, such as real estate or intellectual property. Unlocking these hidden gems can lead to substantial gains for investors. Turnarounds. These are companies that have fallen from grace, facing financial challenges or operational setbacks. Successfully navigating a turnaround can be highly lucrative for investors brave enough to take the risk. Remember, these categories are not set in stone, and some companies might straddle multiple categories. Use these classifications as a starting point to guide your research and understand the factors driving a company's performance. Let's shift our focus to understanding when to buy a stock. The ideal buying opportunity is a delicate balance between maximizing potential upside while minimizing potential downside. Remember, stock picking involves an inherent risk-reward trade-off. Before making any investment decisions, carefully assess the potential for both gains and losses. Think of it like this. You're playing a game of poker, and your goal is to make informed bets based on the cards in your hand and the information available. The more confident you are in your assessment of the company, the lower the perceived risk, and vice versa. One effective strategy is to watch for market corrections or pullbacks. These temporary dips in the market can present buying opportunities for stocks with solid underlying stories. Think of it as a sale at your favorite store. You're not buying discounted items because they're inferior. You're taking advantage of a temporary price reduction to acquire something valuable. Remember, the key is to stay focused on the fundamentals. Avoid making impulsive decisions based solely on price movements. Instead, use these opportunities to acquire shares of companies whose long-term prospects remain intact. Once you've identified a compelling company story and pinpointed an opportune moment to buy the stock, the next step is to diligently monitor your investment. Remember, investing in stocks is not a set-it-and-forget-it endeavor. Companies evolve, industries shift, and market dynamics change. Therefore, it's essential to stay informed about any developments that could impact your investment thesis. Regularly review your company's financial performance, paying close attention to its earnings reports, management's commentary, and any news or events that could affect its future prospects. Think of it like tending to a garden. You wouldn't plant seeds and then abandon them, hoping for the best. Similarly, your investments require ongoing attention and adjustments to ensure they align with your financial goals. Let's recap some key takeaways from our discussion on successful stock picking. Embrace your edge. You possess unique insights and experiences that can give you an advantage in the stock market. Master your emotions. Stock market volatility is inevitable. Learn to manage your emotions and avoid making impulsive decisions based on fear or greed. Craft compelling stories. Develop a logical and well-researched narrative that explains why a company's earnings are poised for growth. Understand the categories. Familiarize yourself with different stock categories to guide your research and understand the factors driving a company's performance. Buy low, sell high, figuratively. Look for buying opportunities when a stock's price falls below its intrinsic value, and consider selling when it becomes significantly overvalued. Monitor and adjust. Stay informed about your investments and make adjustments to your portfolio as needed, based on new information or changes in market conditions. Thank you for joining us on this exploration of the fascinating world of stock investing. We hope this episode has empowered you with the knowledge and tools to approach the market confidently. Remember, successful stock picking requires a combination of research, discipline, and patience. But with the right mindset and approach, anyone can learn to navigate the market and build a brighter financial future. If you enjoyed this episode and found it valuable, please share it with your friends, family, and anyone who might benefit from this information. Don't forget to subscribe to Simple Mindspace for more insightful episodes on personal finance, financial freedom, and unlocking your full potential. Until next time, happy investing.